What is going on, investors? In this video, I want to give you guys a Tattooed Chef update because the company have been making some announcements which haven't really got media attention. So two key important announcements, and I also want to discuss the biggest dangers that I see going into Q3 earnings. Okay, so I'm remotely confident that we'll do very well in our earnings, especially in our top line, but there are some risk factors that the company themselves has made us aware of, and I would like to make you guys aware of going into Q3 just to manage your expectations. So if you gain any value, please make sure you smash the like button. If you're new to the channel, hit the subscribe button and the notification bell if you want to stay up to date with all of my latest videos. Also, if you want to join my Discord group, the Patreon link is in the description below. I share all of this information first with my Discord before it comes to YouTube. So with that said, let's dive into it. Now, Tattooed Chef made this announcement a week ago. They said 2021 was a year of introducing the Tattooed Chef to the grocery channel, and it's absolutely been the case. Okay, I invested in Tattooed Chef when it was a SPAC last year, October. So I've been in the stock for over a year now, and it's really incredible what the company has been able to achieve within that 1 year time period. And to see the stock now worth less than it was when it was a SPAC is absolutely bizarre. It's absolutely bizarre. It's been an absolute yo-yo of a ride. But hey, it's a company that's currently being overlooked by Wall Street, and this is how we get one up on Wall Street, okay? Because we have been tracking all the major wins that Tattooed Chef has accomplished over the past year. And, you know, we've been having opportunities to build our positions. So by the time Wall Street gets wind of what's been going on, you know, when more analysts starts covering the company, then us early retail investors will be able to benefit the moment hedge funds start really loading their positions. I mean, we saw the exact same thing with Celsius Holdings. You know, we were buying Celsius Holdings when it declined back in March. You know, we saw all of their distribution wins. We saw Monster Energy report in Q1 that, hey, Celsius is gaining market share. And, you know, this was a time when we were loading. So this was way before Wall Street decided to get involved. And look what happened afterwards. The stock price doubled in value within the next coming months, you know. And I also believe this will be the case with HIMS, ticker symbol HIMS. You know, we've been tracking their progress throughout the whole year, their partnerships, you know, their endorsements, their acquisitions. We are doing our homework now, and all we have to do is remain patient, because eventually the analysts will start covering these companies. Then that's when the big money will really start to roll in. But up until then, we just got to remain patient and follow the progress of the company. So back to Tattooed Chef, okay? So they said with the public announcement below, Tattooed Chef is now available in every major market across the US. We are also proud and excited for what has been accomplished in 1 year. We tripled our store count. Insane. I mean, how many companies can you say have tripled their store count within the space of 1 year? It's an absolute testament to the management, and we have to give credit to where credit is due. And I said it here with my Discord members, you know, we have to give credit to them. They have done absolutely insane over the past 1 year. Now, another major update with the company was yesterday. They announced that we are now in Winn-Dixie shoppers, and you can find Tattooed Chef in a Winn-Dixie store near you. I'm surprised they didn't release a press conference. I guess Winn-Dixie's is not as huge as Public or Kroger or Target. But again, this is another retailer on board. And I shared with my Discord here that you can see that they have 495 locations. So if you have been tracking Tattooed Chef's locations and their distribution points, you can add another 495 locations to your tracker. Again, absolutely phenomenal to see. The company has been doing incredible. And I am still very, very bullish on Tattooed Chef. Now, let's turn our focus to some of the major risks going into Q3 earnings, okay? So this is our most recent 10Q. And the management addressed the decrease in net income that we saw during the periods 2020 to the same period this year, 2021, okay? And they listed a number of factors, which I think will be one time. They mentioned about deferred tax assets, operating expenses resulting from being a public reported company during the 2021 period. But this is where I really want to draw your attention to. So freight and container costs, okay? They said here that the inflationary increase in freight and container costs from 2020 to 2021 shows an increase of 1.36%. When the freight and container costs are taken as a percentage of revenue for the 6 months period ended June 30, okay? And they gave even more detail with regards to the cost of goods. So the cost of goods sold increased by $11.73 million or 37.82% to $42.75 million for the 3 months period ended June 30, 2021. And they reference that the increase in the cost of goods is primarily due to the increase in the sales volume and the increases in freight and container costs due to inflation. Now, the increase in container costs costs is broad-based. It's not just isolated to Tattooed Chef. We've seen this supply chain issue referenced in many earnings calls of many companies. And just to put it into perspective, if you're not familiar, take a look at this. Okay, so this is a report from the Financial Times. They said there's yet another surge in shipping costs. Okay, to put this into perspective, right? So if you are shipping from the Far East to North Europe, back in August 2020, it would have cost you less than $2,000. Fast forward to where we are now, and it's approaching $14,000 for the same freight and container shipping costs. It's nearly 4 times more expensive, which is absolutely insane. So that's about a $6,000 rise in shipping costs per container since the end of April. Not only has it become far more expensive to ship goods across the Indian Ocean and up the Suez Canal, the service has become poorer. Okay, so this is an issue felt broad-based, and one of the main reasons why the market is really concerned about inflation right now, because this is going to affect the bottom line of many companies, and as such we're seeing the market start to downtrend, especially in the S&P 500 and the Nasdaq. Now, the management of Tattooed Chef have highlighted their main risk going into Q3, and it's pretty much prolonged inflation could result in a higher cost and decreased margins and earnings. Okay, so a majority of our products are manufactured and sold inside the United States, which increases our exposure to, among other things, domestic inflation and fuel price increase. So we're not necessarily worried about our products coming over from Italy to America. They're more concerned about domestic inflation. That includes an increase in interest rates, fuel, wages, and other costs, which, if they continue for a prolonged period, may adversely affect our results of operation. If our costs are subject to continuing significant inflationary pressures, we may not be able to fully offset such higher costs through price increases. And I mentioned in my last video where we highlighted that Target have actually reduced the price, so that's going to even hit our margins even harder. Our inability or failure to do so could harm our business, financial condition, and results of operation. So going into Q3, it's my expectation that we will beat analysts' expectations. I know I said this in Q2, but Q3 typically has been our strongest quarter. However, like we've identified, the cost of revenue is going to be absolutely through the roof, and that's going to affect our bottom line. So our bottom line, I think, is going to be a bit ugly, but I think our top line will be fantastic. So that's my predictions going into Q3. Again, my last predictions, I was completely off the mark, but we just have to wait and see. So I hope you guys gain some value from this video. Please start factoring into your valuations a potential for prolonged inflation, like management have already addressed. And remember, this is a long-term game, so I don't think this will last forever. I know the Fed have referenced that inflation is transitory. It's not looking like that, mate. It's really not looking like that. But with that said, thank you so much for watching. I hope you gained some value. If you did, please make sure you smash the like button, hit the subscribe button, and the notification bell if you want to stay up to date with all of my latest videos. With that said, I'll catch you in the next one. Peace.